Ladies and gentlemen, do you smell that in the air? That right there is fear. 6 red candles in a row on the SPX. Oh my goodness. Everyone thinks a crash is coming, but I'm getting all bulled up. Kinda. Not really. We got a lot to talk about in today's episode. We're going to be mapping out some key levels. Look, everyone's wondering if this is where the turning point starts in the stock market. I'm not convinced, okay? And we'll talk about that here in the charts. Let's get into today's show. All right, everybody, welcome back. We're going to go over the market dashboard first and foremost. Red Sea we're looking at over here. Dow Jones, S&P 500, NASDAQ, NYSE, everything. Small caps, mid caps, S&P 100, all down on the day. But it's not like aggressive selling down, okay? Look it. Down 1% in mid caps, 1.35 in small caps. Small caps have been range bound for 6 months now. Not much selling activity, but yes, everything's all red, okay? We're going to get into the charts here momentarily. Look at the 11 sectors, all in the red too. Either this is just a killer opportunity to start buying some specific dips, or this is the start of something bigger. Okay, the CPI data came out today. I'm not going to get too deep into that, but what happened when the CPI print came out? Dollar flat on its face, fell down. We're looking at a 5-minute time frame, and then all of a sudden it started recovering. So the most bullish thing the markets did was have the dollar fall down on its face after the CPI data. So everything was looking very, very bullish. As you can see, a market open, the S&P 500, the NASDAQ, and the Dow Jones, everything was correlated very well. And then you match that up with the dollar being, just plummeting down after that data. Everything looked very bullish. But as you can see, it took a turn and just started chugging higher and higher. A big key level that I'll be watching is this gap to be filled. If that gap is filled, that can act as resistance, and we got to see what happens from that point. If the dollar continues to press higher, that puts pressure on the equity markets as well as commodities too. We still finished down on the day, but obviously the S&P 500 did finish down on the day, but it was not doing too bad out of the gates. It just really, really started feeling the pressure when the dollar was moving up. Meanwhile, let's take a look at this. TLT. TLT broke out of the symmetrical triangle, so a target would be right at around 156. But hold your horses. Okay, what do you typically notice when we get these spikes in the TLT? As we're running into this 152 that acted as resistance there, it fell down. Okay, well, let's bring up this chart. I shared this on Twitter just recently. When the big spike takes place, we're at a resistance here, a spike here, now we're getting another spike. Look down at the S&P 500, we're looking at the SPY. What happens? It actually signifies an area where they start bouncing. So as soon as this finds resistance and starts correcting down, that actually spots a short-term bottom for the S&P 500. As you can see, this high right at 152, pow, we started moving higher. Okay, this one right here, we started moving higher. This one, pow, we started moving higher. And this one, well, maybe we're going to start moving higher as the price action is hitting a support of a trend line. Meanwhile, the TLT is hitting an area of resistance. If you take a look at the TNX, it actually cracked down through this channel, which is actually bearish. We'll see if it gets continuation and continues pressing lower. But it was a pretty large range red candle, and typically you have a period of consolidation or it snaps back. And as you can see, there's been times where we had large range candles where it gets some follow through to the downside, but we're right kind of here at this level of support too as well. The PPO does look like it's crossing over, and if this breaks down, well, that would just signal to me that the TLT bonds can continue to press higher, because a target of this breakout would be right at around 156. So that would potentially signal that, okay, the SPY might have some more room to fall here. But let's take a look at the weekly time frames on a few things, okay? So I brought this up in previous episodes, but the EMA, the 10-week EMA, we just pinned right into that area, okay? And that's acted as previous support there multiple times too as well. So that's something to watch out for. The week is still not over, and the weeks, typically when we reconnect with the 5 EMA, we've seen times where it bounces back up and gets back above it. But as you can see here, something important took place that I haven't called out. If you look at this candle, and this candle, that is actually a bearish candlestick formation. I believe this is called an evening star, where you get this big green candle, a small range candle, and then you get this big red candle following through. And now we're getting some follow through to the downside, but the week is still not over yet. You can look at the NASDAQ also from a weekly perspective, and just last week it was a bearish engulfing, just a bearish pattern over here as far as the candlesticks go, and we're getting follow through to the downside, but it is overall still in bullish context. We're sitting right there at the 5 weekly EMA, and the 10 weekly EMA has acted as support and support here before. So if the NASDAQ 100 wants to continue to fall down, we might find support at 15,200. And if you look at the Dow Jones Industrials, this looks the weakest of them all. We're actually having the 5 weekly EMA crossing down through the 10. And, I don't have the IYT, the transport index. I can't remember the ticker. But the IYT, the last time it did this, then it actually had follow through and it's been heading lower ever since from a weekly perspective. And if you look at the PMO here, clearly if you're long, you have wind at your face right here. And, it's hard to get momentum and to go long while you have, you don't have the sails or the wind at your back to help you move forward. So this is something that we're continuing to watch. Let's look at the S&P 500 on the daily time frame now. So the wedge, it broke today. However, we need to see continuation. We need to see it hold down there a couple of days. This is the SPY. If you look at the SPX, though, there is 6 red candles in a row, and there's pretty large range candles, right? So big moves to the downside. Okay, we stretched up and then we snapped back over here, okay? Every time it's hit the 50-day moving average, we've seen the market react positively and it bounces back. So are you going to make a bet against that probability taking place again, or are you going to wait and be patient, or are you just going to take this as an opportunity to potentially catch a ramp higher? Me personally, I was looking for opportunities to buy the dip, because it makes for a good risk to reward. I wouldn't be I'm not going to be concerned until we start breaking past this right here, this low at 435, potentially even lower 430. The reason why is because if you just look at a trend, okay, higher highs, boom, 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 and higher lows. It just keeps moving up and up. Okay, until that changes, we're gonna have to put in lower lows and lower highs, and we're not there yet. Can it happen? Obviously, it can happen, and it can happen at a blink of an eye. There are multiple reasons as to why to be bearish here, but you got to follow price, not narratives. And price action right now still remains to be bullish, and we're getting an opportunity, a pullback into a level of support. And if we crack down through that, yeah, have stop losses in place. Big deal. And if it continues to drop lower, oh, cool. Congratulations. Look for the next area of support, which could be something even as low as 405, which is the 200-day moving average, and that coincides with a couple other areas too as well. Now, if we're looking at the 15-minute time frame, hello, falling wedge right here. It filled the gap, positive divergence taking place. Don't be shocked if we get a bounce or some sort of gap up, okay? To be honest, the most bullish thing that can probably happen is a big gap down tomorrow, because the big gap down, as we've been seeing what's been taking place these last 3 or 4 trading days, or not even two or three trading days, we've been getting gap ups, and then people are almost saying, I can only imagine that traders are holding, cruddy positions. We get a gap up and they're like, all right, get rid of it, I got bailed out. And then all of a sudden it gets you get selling pressure in, and it starts rolling over. So get a gap up, sold, gap up, sold, gap up, sold. Okay, if we get a gap down, that might be an opportunity to start going long into a certain area of support. So we'll see how the futures market in the afternight session wants to react with all of that. But there is still support, obviously, at 436 and right here at 441, 440, this range too. So that'd be the next area. As it stands right now, though, in the shorter term, we have a high, a lower high, a lower high, a lower high, a low, a lower low, a lower low, a lower low. And the price action is coiling up here very tightly. So don't be surprised to see a gap up. If we get a gap up in overnight session, then maybe we get some more continued selling, just like we've been seeing these last 2 days. We get a big gap up, and then it gets sold into, okay? But a gap down might change that narrative. Another thing to pay attention to very closely is the BP-SPX. The BP-SPX is now oversold. Okay, the RSI, this is something that we've been waiting to see, either getting overbought or oversold. So this right here, being oversold, says to me that there's an opportunity for a bounce. Can breakdowns occur when it's oversold? Yes, and breakdowns do occur when price action is oversold. But the last boom, 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 boom here, these areas have all acted as levels of support, and we found bounces from those levels. So it's not necessarily the area in the perfect setup for a short right now, right into the 50-day moving average on a large range candle. it doesn't make sense to short. You need to get aggressive shorting if we get some continued momentum to the downside or a period of digestion, and then we get some sell side activity too. Then you can get a little bit more aggressive. As far as intraday shorting, that's a whole different story. I'm talking more about swing setups where you're holding it multiple days. If you're holding it multiple days and you're shorting this market, that's a little iffy in my opinion, because you can wake up the next day and have the market up 3%, 2%, or individual stocks up 5, 10%. It gets crazy. Let's look at the Russell 2000, still range bound, big range candle to the downside, coming into an inclining 200-day moving average. Last time it was there, it acted as this area of support. So that's something to pay attention to. The PPO crossed over to bearish, still above zero, still range bound. I don't see a trade setup right here at all. It's just range bound. Now, I want to talk about this really quick. Start to get in the mind of passive investors, okay? So passive investors, okay, been investing in small caps. Say if they had the IWM or another small cap fund. They every week, every month, whatever, they're putting some in, and the market's just been ramping higher. So what does that do to their average cost? Their average cost, it moves up because every time that the market moves, the average cost goes up. Now, we're looking at a 6-month range right here where it's going completely sideways. So they've been just adding in. The average cost keeps going up, it keeps going up, it keeps going up, and it keeps going up. Okay, this is just me thinking out loud here, but what happens if all of a sudden we do get a crackdown through 210? Okay, and then their average cost kept on moving up higher and higher, and they're used to seeing all these gains go boom, 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 but now they're all of a sudden like, holy cow, how am I in the red? So start thinking like that, because if we get a crackdown or crack up, it's going to probably be an aggressive type move. It's going to probably be, it's probably going to be a furious type move. We're probably going to see a big move to the downside, maybe a retest, and then some more continued selling. Or if we get a breakout to the upside, we're probably going to see a big rip to the upside, maybe a back test, and then continued move too as well. So this range is very important. It could be a period of distribution, could just be a period of consolidation. It is a period of consolidation where the consolidation resolves itself to the upside. Now, if we look at the 15-minute time frame, I have very cool UFO saucer drawing going on. Let me break it down for you. Last time I showed this chart, I was just showing a head and shoulders pattern. Okay, retested, and then the full measured move would come right down to around 217 to 215, this kind of zone right here. Okay, price action continued to drift. I wanted to call out, it's coiling up tightly. This is a rising wedge. It's putting in the lower highs and lower lows. Okay, so perhaps we get a full measured move of this head and shoulders, and then this can act as an area of support. Falling wedge though, as it's coiling tightly, I wouldn't be surprised to see a break out of this to come retest the 5-day moving average. It is taking place on a positive divergence in the RSI. So that means momentum to the downside is slowing down. Even though it's heading lower and making lower lows, momentum is suggesting that there's some strength also kind of stepping in. Okay, let's look at the Dow Jones. Dow Jones Industrial is one of the weaker ones. We tagged the 100-day moving average. That's in confluence with support of this trend line. Tagged here perfectly. Are we going to get a breakdown? Well, this is a big red candle to the downside. I wouldn't be surprised to see it bounce up. This is also in confluence with the lower Bollinger Band. This is all an area of support down here. So if we get a crack, maybe it's going to be a very aggressive crack, and then we see some sell side activity. But as it stands right now, we have not got that confirmed yet. Okay, so maybe we get a gap down. Then it recovers. It's very hard to determine as of right now. But what I will say is if you look at like the IYT or the transportations, they've been diverging for a long time. And eventually that matters. And we might be seeing it matter right now. Okay, the 15-minute time frame, we had a falling wedge. We broke out. Okay, that was probably close to a full measured move. We tagged the 5-day moving average, acted as resistance. We are coiling up again. Another rising wedge on a positive divergence taking place. PMO is also a positive divergence. Wouldn't be shocked to see this sprout out to the upside again. Okay, if we get a gap up tomorrow, I would expect that we can possibly see some sell side activity going into the 5-day moving average. If we get a gap down, perhaps once again that narrative changes. If you look at the BP chart on the INDU, I don't use this one that frequently, but I just wanted to call out we are getting to that oversold territory. When it gets there, it can hold down there for a while, but it can also bounce from that level. Okay, NASDAQ 100. Area of support to watch out for that I'm looking at is 370. This is on the Qs. It acted as resistance. 50-day moving average is right there. lines up. Resistance can become an area of support. We've been seeing 1, 2, 3, 4, 5 red candles in a row. Strong move to the downside. We haven't seen selling like this take some, in a while. But just note that it's like nothing aggressive. Okay, we're not far from all-time highs. I think the market S&P 500 is down like 2.18% from its all-time high. Okay, that's the reality. Okay, so the fear should match that. There really is no fear as it stands right now. Okay. Qs, 15-minute time frame, pulled right into this area of support. We bounced there a few times. We're still holding 374. We back tested this channel, head lower. Okay, nothing going on right here in the Qs. Perhaps we come retest this 5-day moving average. Perhaps we even break down to 369. I don't see the trade setup right now. I need to see what happens in overnight in order to get a little bit more clarity here on the Qs. Okay, this is interesting to me. This is the chart that I find very interesting. So we've been talking about this last couple of videos. BPNDX, okay? We talked about oversold, overextended territories where, you can look for sell or buy signals. Well, first off, we talked about this triangle. We talked about this triangle, and it's kind of matching up within the same kind of months, right? Where you typically get more volatility in September, October, August, September, October. And what I find so interesting here is this. We broke down. It was a false breakout. We pulled back in. And that created that September, that August to September. Remember that blow-off type of top before it completely reverted? Well, there's a lot of people calling for a big melt-up and blow-off top to occur. And if that's the case, look what's taking place right here. A very similar type coiling pattern. We just broke down. The RSI is not overextended to the downside, but it's not far off. What happens if this starts turning back up through this? Are we going to see another rip-facing melt-up rally, and then it sell itself back off? Who knows? Okay, but I just found that this pretty interesting because it's happened literally right around the same time as we're seeing here. Now, mind you, this rip-facing rally was August to September, and some might argue that, okay, yeah, no, we had that rip-facing rally. Now we're starting to see it weaken. This could be the potential breakdown where we actually see more sell-side activity. And I would have to say, yeah, completely fits the script there too, all right? All right, everybody, that's all I have for you on today's episode. So just to recap, to pay attention to a couple of things. First off, when the TLT reaches this level of resistance and we get this spike, we've seen the market, as it's pulling into resistance, bounce from those levels, okay? When you look at the S&P 500 on the daily time frame and we're pulling into these areas of confluence of support, the market has bounced from those levels. So you're either going to play with the probabilities on your side of a bounce taking place, you're going to sit in cash, or you're going to chase the move back up. Or, I guess, start hedging, start going short. Not hedging, going short before you get confirmation. Okay? At some point, this market, this technical pattern, it will break. It's been coiling up tighter and tighter and tighter. Perhaps it's now. Perhaps it's not. If it's not, probability suggests we bounce up higher. And then guess what? Are you going to want to be able to take advantage of that? Because the most times that that's happened, it's very easy to miss that move. It's like you get this move down and then all of a sudden you get this super strong day and you're like, well, I missed that. All right, so right now, as it stands, pulling into the 50-day, the lower Bollinger Band, right, just under this technical pattern, to me, this is an opportunity to go long, but yet still be tactical with this environment. Because if it does break, you don't want to go losing a lot of money. You're averaging down a bunch of times, until you get blown up. Okay. If you look at the 2020 script or the 2019 to 2020, right before the pandemic, you'll notice we had a very similar situation where price action grinded higher and higher and higher. And when it broke hard. That's all I got for you on today's episode. Everybody have a wonderful night.